Meanwhile, we're having, the price of oil plunge into the 40s. What's going on? What's your overall view of what is going on? Is this the storm that a lot of people have been predicting, whether they're inflationists or deflationists?
Well, it certainly could be. And I'm going to answer your question, but I want to give a little bit of a foundation. And that is one of the lecture series I did early on. And I was sort of famous in the early days, meaning going back about a decade or more. And what I did on a lot of my speeches, I'd bring these small DVD clips of movies, primarily, that depicted, the old adage, a picture's worth 1,000 words. Well, a 2-minute or 3-minute DVD clip is worth thousands of words. And one of those is a docudrama produced out of the BBC that was about an oil derivatives blowing up. And what it did was really, in my view, cement to people's consciousness that oil is the most important commodity, and that without oil or energy, nothing happens. If you go to sort of the New Age bent, and I'm not a New Ager, but we're energy, everything is energy. Energy is the most important thing. And I agree with the idea that without energy, nothing happens. And so that's crucial. And the price of energy, of course, is crucial because it affects everything. Shipping, growing food is energy-based, transportation energy-based, on and on. So I don't want to belabor the point, but I want to give the picture of how profoundly important it is. Now, if we drill down to your question, is this the event that takes out the inflation deflation arguments and starts a downward spiral similar to 2008 or perhaps even more? I think the next step in looking at that would be to quote Jim Rickards. Like him or not, I think he's a very good intellect, and I think he's a straight shooter in most aspects. And one is how much debt is involved in the derivatives market surrounding oil, and in particular what's called the tail end of the curve, or the marginal producers, which is primarily fracking. And these people, as a whole, are in dire straits. And that means that the amount of debt that is carried by the fracking industry at large is about double to what the subprime market was in the real estate fiasco of 2008. So let me summarize that, Greg, and you can ask me everything you want. We're looking at an explosion potentially that's greater than the subprime market of 2008 because, one, oil or energy is the most important sector out there, and two, the derivatives exposure is at least double what it was in 2008. If you want to add a third, the banking sector is really more fragile because instead of having several entities that could go down to too big to fails have been consolidated, so we have even less ability to weather the storm.
I think, back in the day, in the run-up of the subprime crisis, and I was working at, mainstream media, I was working at CNN, and everybody was, one of the things you heard was, it's going to be contained. Subprime's going to be contained. Well, that was a total farce. My sources back then were saying it's going to affect everything in the real estate market, not just subprime. Could the same thing be said for derivatives in general? I mean, now the Bank of International Settlements is pegging it at a quadrillion, 1,000 trillion. I mean, not more than a couple of years ago it was 630, 700 trillion, and now they admit to a quadrillion. Some people say it's more than twice that, but let's just use the official number, 1,000 trillion. A 2% move, that's $20 trillion. I mean, that's a huge deal. So my question is, could the oil derivatives take down other derivatives in a daisy chain event?
Absolutely. There's no question about it. The main problem is, one, the over leverage of the system as a whole. And as Buffett has said, the weapons of financial mass destruction, which is a true statement. And secondly, if you look at how they're interconnected, a lot of times some of these oil derivatives and derivatives in general are tied not only to, will an interest rate go up or down, or something very simple that anyone could understand. They're tied to something like a spread trade. For example, will the euro deflate against the U.S. dollar at such and such a rate versus the T-bill rates degradation versus the short spread on the 10-year note. And that's just a simple example. I mean, they get more and more exotic. So a lot of them could tie not only a financial instrument to a financial instrument, they could tie a financial instrument to an oil derivative. And that whole thing could be used as an A entity against a B. I'm not trying to drill down too far, okay? What I'm trying to do is give a flavor to how complex these mathematical equations are, and no one really looks at the risk in them. I mean, the amount of risk that they mathematically compute, that is the quote-unquote risk in a certain derivative or swap, is ridiculous relative to what the potential repercussions are. And we learned that already through long-term capital management.
And it can affect the entire derivative complex, interest rate derivatives, oil derivatives, commodity derivatives, everything.
Absolutely, because it's all tied together. All these banks, and that going back to that DVD clip that I referenced earlier, it showed that all the banks are interconnected, and that a failure of one could take a bank that's very solvent on, at 12 noon on a given day, but yet they're tied into somebody else that they don't even realize, and they're going down, and all of a sudden they get a call, hey, pony up X billions of dollars, or 0.5 trillion, or whatever the number is, and all of a sudden they're in trouble. And it's because of several things, but simply stated, it's because of the over leverage in the system and the systemic failure problem, which means all these banks are tied together.
So what happens if we get this implosion? We're talking, some people are saying oil's going to go to 30, 20, in the 20s or in the 30s. What happens if we get a derivative implosion that sets another financial meltdown a la 2008? So let's say we have another financial meltdown. What happens to the price of silver? What happens to the price of gold? What happens to the price of fuel? What happens if we have a meltdown? Take us into your little scenario world here. What happens if we do get a derivative meltdown, like many people are predicting?
Yeah, let me answer that again. I hate to editorialize everything you say, but I'm a pretty deep thinker, and I like to build a foundation. I like people to really know something solid that they can research themselves and verify, and then move on from there. So how it's going to affect gold and silver. But I did a little quick research here. We're not oil and gas guys, but I do pay a great deal of attention to the sector, as I said earlier. And this is something that I printed out, so I'm going to read it. It's from an excerpt from Art Bergman. He's an energy analyst, and he's written on peakoil.com. And here's what he says. Continental Resources is the biggest player in the back end. And you don't understand any of what I'm saying, just Google it, because Google's so good these days. You can, Google things and get a quick education without, having to call me up. So their free cash flow from operating activities minus capital expenditures was negative $1.1 billion in the third quarter of 2014. That means that they spent more than $1 billion more money than they made. Their debt is 120% of equity. That means that if they sold everything that they own, they couldn't pay off all of their debt. And that, Greg, that was at $93 oil. Okay? So, one more, just to give you the flavor. Now, let me interject here that all markets move at the margin. It's the marginal people that are just barely making it that make up the amount that's required. In other words, if there's a high demand for fuel, then you're going to put on marginal wells, which is what tar sands and the back end is all about. And if there isn't that demand, then they're the barely making it at high prices, they're the first ones to go. One more, Chesapeake Energy Corporation. Their free cash flow, that's the cash from operating activities minus their capital expenditure, was negative $750 million in the third quarter of 2014. Chesapeake sold $1.1 billion in stock in the third quarter of 2014, and their total liabilities are $23 billion compared to their market cap of $11 billion. Basically, Chesapeake Energy Corporation's liabilities are double their market capitalization. So these are just two examples of the kind of problem we're in. Now, you say, well, if this oil sector really starts to unravel, how will that affect the market? Well, just like the back-end question. One thing I wanted to say I forgot about the back-end.
Yeah.
This stuff always unravels in a more longer time frame than you might expect. I want to make that very clear to your viewers. I know you get a lot of views, and David said, I'm not implying this is going to unravel tomorrow. I really think it's going to take probably 4 or 5 months from now, Greg. So I think, May, June, start to look for the repercussions of this sub $50 oil. It's just the way markets work. It's as you said, the banks will come in. Congress has already put the taxpayer on the hook for these derivatives. I mean, they've already set in place ahead of time, somebody else is going to be responsible, certainly not the people that wrote the derivatives. What a concept. So we're in a situation where you've just got to understand that the consciousness that got us into this problem is so far removed from reality that the way to come out of it is some other convoluted, bizarre, obfuscated situation that's going to be unintelligible to most average hardworking people that say, what is going on? And they won't understand it because it's going to put under a mainstream media with sound bites that are going to twist it and spin it and make it sound like everything's okay, when the reality is things are continuing to decline.
Well, if you would have said 6 months ago, hey, when oil was around $100, that, hey, it's going to get cut in half. Actually, you're going to see, you said 6 months ago, hey, you're going to see oil in the 40s, which we have. People would have laughed you out of the room. Maybe that was the black swan that nobody saw. Maybe I kept saying that we're going to have some kind of dislocation. I thought it was going to be in the gold and silver market. It wasn't. But I said, we're going to get something. We're not going to leave 2014. It's going to roll into 15. And I did not know that the oil would be the black swan, but certainly the crash in oil prices and the speed at which it crashed. Do you think that could have been the black swan that's taken us into 2015?
Well, it certainly merits extreme thought, because it could be. I don't want to say it probably is. I don't want to be right, but certainly, as I said earlier, and it's the most important thing to get out of this interview, is everything depends on energy. And because we're in a situation where this energy market has imploded, Google what a low oil price means for a global economy. Google that and start reading. It'll take you a couple hours just to read like the first 10 articles. Do that and you'll come out with a very good sense of what this really means. A lot of people think, oh, it's great, I can fill up my car for less. Yes, that's true. But that's kind of a small portion of what it means, because what it really means is all these financial instruments, these derivatives that are tied to it, are underwater because of the low oil price. And once those banks that are all tied together start to fail, there's really no way to come back. They'll try. They'll do what you outlined, Greg. They'll put it on the taxpayer. They'll have an emergency meeting of Congress. They'll try to float new bonds or put the debt payments off, 6 months, or put a moratorium. I mean, they'll try all kinds of things. But as I said earlier, the truth will out. At some point, the idea comes that, you know what, we've been lying to ourselves for way too long. We have got a real problem here. And it, in my view, will get away from the authorities. No matter how much spin doctors, the political animals, the power elites, or the mainstream media try to portray it, the reality is going to shine through, and the emperor has no clothes, and people are going to say, oh my God, now what do I do? And what will they do? They'll run the gold. They'll run the silver. That's what they'll do.